Good afternoon, MMTs. We have Amazon. During the Amazon earnings a couple of weeks ago, we had a super gap on Amazon, and that's also on the stockmarketpending.com website. Right now, what I am going to be doing in this detailed update is I'm going to be covering some of the weekly expirations and the 227, which is this Friday, a weekly that you see here, and then again on another contract, which is another week going out on 3/6 of 2015. And we're going to cover the alerts. We're going to be covering why we're going to make money and why is it all the time that we make a lot of money. And here we're also going to do the following. One of the things about stockmarketfunding.com, why are we unique? One, we're very unique. We are market makers in the option pit and the stock pit. Now, everything that we've done on Amazon, the proof is here before all of us. These earnings season and Amazon trades start here, and you can go down, and there are many more Amazon trades. Type in AMZN, hit enter, which we're doing now. And right here, you will be able to see hundreds of trades done on Amazon. And you click number 2 and you go all the way over here, and it's going to go back several years on how we trade Amazon. And right now, I'm shorting Amazon. And everybody knows I'm shorting Amazon. And everybody knows it's done before the fact. Everybody knows why we're buying put options, which was already one trade, by the way. And here's another thing you need to know. On the free trial, you can take a free trial, and I'm only going to say it quick. Click on free trial. There is what it looks like, people. Right here. Get started today. You get to go through the live market hours. There's a phone number for you to call right here. Let's get busy. Now, if you want to open an account tab, you can open an account tab. You can watch the videos, hit the account tab and get started. And for the people that have less money, yes, if you have a $5,000 account, we're going to give you $100,000 intraday, just 21 to buying power. On $10,000 account, we're going to give you $200,000 intraday, and our market makers are here to give you trades. For the people that have less than $25,000 in their account, and the people that are watching this video, you know I'm talking to you. And you know what the pattern day trading rule is. And you know that you've been executing trades with crappy free online discount level 1s and level 2s. You're not direct to the floor, and that's all going to happen for you. So basically, this is going to be the call and put structure and 2 different weekly contracts. 99% of you option traders, which I refer to as retail, you know you've never seen a call chart. And you know you've never seen a put chart. And that's 99.9% of everyone out here that wants to trade options. Oh boy, do they got the answer. You know what you're doing in reality? You're playing blackjack. And come to Vegas, play roulette wheel or Pai Gow or anything. You're gambling. That's what you're doing. We don't do that here. We are market makers in options and equities both. And these are going to be the alert service on the strike prices. With this super gap, we made a ton of money on the call side of the market. And we're finally hitting that upper end of that earnings gap right here at these highs. So I'm going to go ahead and blow this up from the gap part right here. This is the daily chart on Amazon, and we're going to get ready to come down. So basically, if I show you Amazon on a weekly chart, we shorted Amazon back in 2014 from $408 all the way down to these lows in here, around $282. This is a weekly chart. So in calendar 2015, Amazon reports its quarterly results, and it gets this super gap. Super what? Super gap on a weekly chart. Wait a second. All right. 380. So Let's get this down here. We just want to make sure that you see the other one. I have also before us a 385 put is in the money right now. And these were buyable down here at $5.70. This is going to be on the put side. And the put side here is deflated. And on the other side of this trade, which was up and out of the money, because Amazon right now is trading at 378. These were up and out of the money on the 385 call, and that 385 call right now from little over $6 went clear down here, and today that 385 call is $1.75. So the put side on that strike price is working quite well. And this is that 385 put. And what do we call that 385 put? We call that in the money, with the volume of 207 contracts. And you heard what I said. You also know that Amazon was up here at 384.55. And it was a big short on the stock as well. And not only that, when we bought the 385 put, that was the entry at that strike price right here before everyone. No one can deny it. And you now can't deny it because this is the trade right now. And that's that put, in the money put. 385 put, right here, right now. The low is 510, the high is 795, and it's at, what? 2.85 up on the day, on that put side. And this is a put chart. You know you've never seen one. And this is the call chart that's losing its value now. That's the other side. What I have before everyone in our alert service, this is what we call a March 3rd weekly contract, 3-6. This is the put side that was buyable right here. And I'm going to show the put chart right here. And here is the put chart right here. And that means that these puts are totally deflated. This is what the alert services get. We had a low of $4.80 in this, and it was deflated. Now, this is a March 6th weekly expiration as well. And let's take a look at the 380 call now. Remember, the 380 call was inflated up here, and it was. And now that Amazon is trading down below 380, which is right here, everybody. This is, watch my pointer. We got the 385 put. We got the 380 what? Look, I'm going to tell you right now that 380 call was totally retail, as it was. Now, up here, the call contract was $9 today. Now, it was inflated, and this side of the market is going down on a weekly contract. Now, let's make sure you're not confused. Let's make sure you're not confused. This is a 380 put. That's the level 2 buy and sell. That was the low, $2.25. It rained. Now, what are we doing? Right here, simple. This is the put chart. This is the call chart. See, it says call chart right over here. You get to see the mathematical imbalances that you've never seen before when you trade options. And you know who I'm talking to right now. I'm talking to you. And every time you want to go out there and throw money on options and you don't even have a call chart, a put chart, let alone understand where that equity price is going, let alone high frequency trading volume, you don't know. And you haven't got it. And if I were you, I'd get here right now if I were you. And you know what I'm talking about. You can put it into your madness. Or you can keep going in your madness until you're flat broke. It's up to you. We're here. We're waiting on you. So basically, we were inflated up here on this call contract, and we're buying these put contracts because they're wholesale, and the strike price is exactly what it says. It's a 380 put. We got the 385 and the 380s working. Both contracts are weekly. This is a weekly, and the 27th that we showed in the other strike prices, those are expiring this Friday on the 227. All right, for the people on our alert service, one of the things you're going to look at is a calendar month. what is a calendar month? It's the third Friday of each calendar month. So here is a 380 put that was 475, and the strike price is, the last strike price I showed was the weekly. This is your calendar month right here, 320. And here is the 320 call that was inflated over here, meaning, yeah, it was a good buy down here at $1.50, which we did, and it went almost up here to $14. And this is on a daily, and it is a 380 call that was in the money. Now, I'm going to show the back end of this trade because I want to make sure that everybody is aware of the fact that this is a 380 put and it expires in a month. So basically, in our alert services, we are covering everything. They were $38 a contract over here, and not one of you can deny it. That's what that put was worth, and today we're buying it down here at $7.90. And this is deflated. This is a calendar month. Yes, it is. 320 strike price. 320 strike price. 380. The 380. And you got Amazon right here trading on the low today, hit 378. Right now printing right there with the $6.5 ratio. And if you're going to be in my market maker pit, you're going to make a lot of money. And it's not going to be done your way. We know what your way is about. And you know what your way is about. And our way is different. This 380 call was inflated. And it's a call chart. It's going down. And the other side of this trade is going up. And what strike price is it? It tells you right here. Don't get amnesia. It's a 380 put that expires a monthly contract. Once again, this is the premium market maker entry. The call contracts were great, but they're done. They were inflated. They're coming down from $12 right now. I'll show you what that 380 call looks like. All I have to do for you is I'll put that 380 call. Remember, that's the 380 put at 770 and 1030 on the high. Here is the opposite end of this monthly 380 call that was up here at 1210. That's this call. It's a call chart. And the calls are coming down. And they're going to go a lot lower. And we've been trading these things since that opening gap on stockmarketfunding.com. This is a monthly contract. The calls are coming down. And I'm sorry to say, the put side, here it is. Let's make sure you don't have amnesia. It's a 380 monthly put, 320, 2015. What? Expiration, that's what it is. And guess what? You call buyers always get whacked. You've never seen what you're looking at here. And you buy them, you guess at what's going on. You have no idea what a market maker call to put ratio and balances are. You don't have the chart to prove where this is relative to where Amazon right now is trading right here. Okay, down $4.28 on the day. I'm going to pause the video for 1 second. Right here, we have the 227 weekly contracts in this live video and alert service. Then we have the 3/6 weekly contracts on 3/6 they expire. And we also have a 375 call. And we also have a 320, 380 put. And we also have the 375 put to go along with it so that everybody is aware of the call and put strategy for the 320 mark. And it's very, very important that when you are trading these, that you understand how to get paid. And you do, and you will. So basically, that's Amazon. This is a call and put strategy right here with the weekly. It's a special update. It's perfect for the alert service that we send out. We got all our data here. Not only that data is that we've also showed you the actual trades that have taken place on a 380 put chart that's going up. Ha ha ha, that's going up and that's going down. This already went up, it's coming down. And we bought the 385 puts, let us not forget that. And here is the 385 puts again. 385, 227, we're going up higher. And I also will look forward to you people signing up. You want to trade options? You better get with it. And we own these puts. And we're going to continue to buy them. So it's very important on our alert service. And this here is a call that we had showed the charts, called chart and put charts. So Amazon is in a reversal, and shorting Amazon at the highs is the right thing to do.